Good job, Ron. I thought he's lining his consultant job when he finishes.
I told Mike if the screen goes blank, you know I did it wrong.
He's gonna be looking for a part-time job.
I already told my staff I'm coming back as a dope worker. Don't worry, if I plan this right, the only DNA I leave behind will be on the doorknob.
Kelly, please.
By the way, you're the new door person.
Yeah, listen, don't sit near the door. Now I'll call the meeting of the Carbon County Board of Commissioners to order. Please rise for a moment of silence, prayer, pledge of allegiance. Oh God, we implore thee to watch over our military personnel who may be deployed to Afghanistan or any other location where they may be faced with the horrors of combat. Protect them from harm and that they will soon return safely to their home and families. Watch over their families and help them to cope with the stress of separation and added responsibilities till their loved ones return. We ask in Jesus' name, amen.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
These proceedings are being recorded for the sole purpose of constituting the accuracy of written minutes. Tapes are reused, eliminating recorded records of these proceedings. Approval of the minutes of the previous meeting held August 12th, 2021.
Motion approved.
Second.
Mr. Honor?
Yeah.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes. Are there any guests concerning county business at this time? Okay, hearing none, we'll move on.
Report of executive sessions held.
There were none.
Department reports, the budget transfers.
Move to accept. Second.
Mr. Honor?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
The supplemental appropriation.
Motion accepted.
Second.
Mr. Honor?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
Expenditures, approval of payroll check numbers 73735 through 73829, and direct deposit check numbers 6033218 through 6033660 for the payroll paid through the payroll fund checking account for all county funds totaling $656,143.91. This is the payroll dated August 13th, 2021.
Motion ratified.
Second.
Mr. Honor?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
Approval of check numbers 222802 through 223008 for expenditures through the general fund clearing account totaling $466,633.37.
Move to approve. Second.
Mr. Honor?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
The treasurer's report.
Motion approved.
Second.
Mr. Honor?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes. At this time, we'll recess our weekly meeting of the county commissioners and call to order the recessed meeting of the salary board.
The first item is the approval of the minutes of the salary board meeting held July 8th, 2021.
Motion accepted.
Second.
Mr. Severcek?
Yes.
Mr. Honor?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes. Are there any guests concerning salary board business at this time? Hearing none, we'll move on.
Report of executive sessions held.
There were none.
Of course, Judge Nanovic?
I'd like to move to establish the position of one chief juvenile probation officer trainee at $31 per hour. It's a grade S 14 step H, effective as of August 19th, 2021.
Second.
Judge Nanovic?
Yes.
Mr. Severcek?
Yes.
Mr. Honor?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
And I know Mr. Greco is going to be, I'm going to be appointing him to serve in that position. I saw in your personnel report that you do have a change of status. Should I be staying for that, or is it necessary to do so? I'll do whatever you prefer.
No, it's just a recommendation. You're good.
Have a good day.
Thank you, Judge.
Next item is Children and Youth Services. Establish the position of one part-time county caseworker one at $17.25 per hour effective August 19th, 2021, excluded from retirement plan, not anticipated to work 1,000 hours.
Second.
Mr. Severcek?
Yes.
Mr. Honor?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
Corrections. Change the rate of one part-time corrections officer from $12.68 per hour, grade 6, step C, to $11.95 per hour, grade 6, step A, effective August 19th, 2021.
I'll move.
Second.
Mr. Severcek?
Yes.
Mr. Honor?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
Change the rate of one part-time corrections officer from $12.31 per hour, grade 6, step B, to $11.95 per hour, grade 6, step A, effective August 19th, 2021.
Second.
Mr. Severcek?
Yes.
Mr. Honor?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
PCWDA, establish the position of one administrator trainee at $21.85 per hour, grade S11, step A, effective August 19th, 2021.
Move to establish.
Second.
Mr. Severcek?
Yes.
Mr. Honor?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes. At this time, we'll recess our salary board meeting again until next Thursday, during the commissioners meeting. Okay, at this time, I'll reconvene the weekly meeting of the county commissioners.
The next item is the personnel report.
Move to approve.
Second.
Mr. Honor?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
Correspondence was received as listed. Copies will be made available to the press upon request. Children and Youth. For approval and execution, the fiscal year 2021, 2022 purchase of service agreement, in-home provider agreement with the Brian Albacoa, doing business as Homestead Family Services of Allentown, Pennsylvania, as per the attached rates.
Motion approved next week.
Second.
Mr. Honor?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
Fiscal consultant for ratification, agreements with Linda Lewis of Freemansburg, Pennsylvania, and Kelly Noble of Bethlehem, Pennsylvania, to provide fiscal services to the Children and Youth Services Department effective August 12th, 2021 through November 1st, 2021. Rates are at $80 per hour, 56 cents per mile, and $30 per hour for travel time.
Motion approved.
Second.
Mr. Honor?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
Loss prevention, PECOR grant for approval and execution. Authorize the submission of an application to the Pennsylvania County's Risk Pool for the fiscal year 2021, 2022 loss prevention grant to purchase a new PA system for the lifeguard and first aid station at Mock Chunk Lake Park at a cost of $1,339.85.
Move to approve and execute.
Second.
Mr. Honor?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
The solicitors report?
Thank you. Banner request for approval and execution. Banner request submitted for the Shrine of St. Teresa in Nescahoning for the annual shower of roses at the Shrine of St. Teresa. Banner request September 20 through October 5, 2021.
Motion approved next week.
Second.
Mr. Honor?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
Proclamation for ratification. A proclamation acknowledging 100-year anniversary of Surnock Farms, Weatherly, Pennsylvania.
Move to ratify.
Second.
Mr. Honor?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
I'll be further.
Any further business? Hearing none, commissioners' reports. Mr. Honor?
I don't really have much anything. I mean, I was at the Snowback Farm yesterday to present him with a proclamation, and it was well attended. I think there was
way over 100 people there. I mean, it was good to see people out to recognize our farmers. And I think Chris is gonna do a little bit on the maintenance, so maybe I'll chime in on that a little bit later.
And Mr. Lukasevich?
Yeah, first reiterate in regard to the Cernak farm. I think we've been very fortunate this month in Carbon County. We are able to recognize 200 years of the Fogle Farm at the Carbon County Fair. And now this month, we're also able to recognize the Cernak farm and their centennial, their 100 years of really supporting agriculture, supporting this community. I think notable, we talk often about the senior nutrition program for produce that the state has, and our area of agency on aging promotes every spring, and Cernak Farm is a part of that program. So thanks to them and congratulations beyond the proclamation that Commissioner Arner presented. And the personnel report, you may note 3 parking attendants are separating, either resigning or separation. We'll continue. We did have an interview this morning, but we continue to seek what I like to refer to as parking ambassadors for those with the right disposition who can handle the pressures of that position. We would ask you consider to apply. It's not an easy job, but it is a critically important job to the county, to tourism, understanding that parking revenue supports our parks and parking lots. And so it's really a cost saver for the county taxpayer. So I would ask you consider position as a parking ambassador with Carbon County. Last thing I want to mention, I gave Commissioner Arner a quick heads up. I'm going to talk a little bit about operational and maintenance costs. When a public comment that is made goes unchallenged and is in the press, the public tends to believe it to be true. And when a term is used that the public knows epitomizes an aspect of a character or work ethic, not to mention a campaign mantra, I'm kind of compelled to respond to that. So the context is newspaper articles written one by Amy from the Times News and then Ken. Sorry, glasses. All right, Commissioner Arner states, I've always heard let's be proactive and not reactive. It looks like we're being reactive. And this is in regard really to assessing buildings, space needs for Carbon County. And again, happy birthday, Rocky. And every once in a while, we all have senior moments and we forget things. So again, we'll give you that one. But as you might recall, on January 6, 2020, 2 motions were made at this very table asking to suspend for a period of 90 days all construction related to not only 44 and 76, but also the EOTC, so that could be assessed and reevaluated based on cost, needs, things, and other options that were available. And I did review the video for that meeting and the minutes, and you voted no on that. So there was an opportunity missed to do that as a collective body. Also, in February of 2020, and in other multiple occasions, I myself presented these assessments of building options, costs associated with them, and in verbal comments spoke specifically to operational and maintenance costs using 76 Susquehanna as a reference. If I recall correctly, it was the maintenance costs are about $3.58 per square feet down there. Additionally, on 8 October 2020, you and I were present. Commissioner Notstein was not present at that meeting. We voted to move ahead with the 44 renovation project in 76. In addition, in November 2020, during budget meetings, I spoke multiple times in meetings, I believe it was executive sessions and the public session about ensuring that operational and maintenance costs were incorporated into this year's budget for 44 Susquehanna Street. And then I know in other times on the 29th of July, I had mentioned that I did know the costs and I would be more than happy to provide them to you in regards to the Jim Thorpe Area School District office at 410 Center Avenue. You never approached me and asked again to refresh your memory on what those potential costs might be. I do want to let you know that the probably unrenovated, that means not updating the HVAC system, the lighting and that, it's probably in the neighborhood of 75 to 100,000 dollars per year. Again, as is right now. Again, it depends how you look at the square footage, but that's a really good ballpark number. But what I want to remind you, Commissioner Arner, is that, you know, what are the costs, or the questions I have? What is the cost, the renovation, excuse me, the operational and maintenance costs? And these are rhetorical questions. So what is the operational cost for 44 building? What is the operational cost for 76 building projects you voted for? What is the cost, operational and maintenance, for the Emergency Operation Training Center? And again, another vote that you were in favor of without any concern for the operational and maintenance costs. And multiple times, matter of fact, even before I was elected, I can remember questioning Tony Gangusa in regards to 44 and 76 numbers, and then subsequently after being elected. So in multiple times to include from Greg Armstrong, he had asked for a workspace and allocation study, as have I done. Never any support for that motion to invest the time, money, and effort to have that done to ensure that we are wholly and completely meeting the needs of the county. So while I agree those operational and maintenance costs need to always be included and considered, the fact is, speaking for myself, I'm well aware of those costs. They were made available, at least in regards to the Jim Thorpe Area School District building and to other projects by me. So I must say, again, when I looked at, I believe it would have been when Ron Gower was here, the comment was, we don't know the cost of renovations or yearly operational costs. Well, we do know in ballpark figures the operational costs. In regards to the renovation costs, well, of course, we have to have subject matter experts do that. And therefore, we voted 2-1, Commissioner Notstein and myself, supporting Boyle Construction doing the exact thing you were requesting, yet you voted no for that study that could have better allowed all of us to make a more informed, better informed decision once those numbers come in. So I see a little bit of inconsistency there. And so I would ask that if you have any concerns or issues in regards to operational and maintenance costs, and they have not been addressed, please reach out to me and we'll go ahead and discuss those, because they are going to be important moving forward with the Jim Thorpe Area School District building if we decide to do so. That's all I have.
And reiterating of that,
Yeah.
I mean, with the 44 building, that building was completely heated, uninsulated.
Mhm.
So I think we were just going off of that. That's sort of what the cost of operations of heating was going to be there. Now, I understand that there's more to it than that,
Mhm.
but it should be pretty close to that. On the voting on the no for it, I don't know if you know this, but it did pass and it's going to continue. And I'm one of those people, if I was on the no end of the vote, I'm still going to help with the operations.
Yeah.
I'm not going to sit
Yeah.
here and let the thing fail.
Yeah.
I've never let anything fail like that. And to the cost of up there at the building, we're going to reconfigure that building. So that's an altogether different animal than just buying the building.
Mhm.
You know, when you get into that, that's $3-4 million. You want to make the parking lot bigger up there. That's going to cost more. And I look at it this morning. I work with the maintenance every day. I see things that are failing in the courthouse. This morning, they showed me something that failed in this building, the heating system. Yesterday, it was like a refrigerator in here. You know, there's work on these buildings that have to be done before we start getting extended out too far. I mean, when you get out that far and your wheelbarrow flips over, it's hard to get that money back into the wheelbarrow. And I think we got to start watching what we're spending here. There's people, we're hiring people all over the place, and all I heard about is space, space, space. Well, we're vacating a building over there, and we don't even know how it's going to be reconfigured. And I can see buying another building, but there were other options. That the one building in Hyden that was for $515,000 that could be moved in immediately. So, and all the direction was for buying this building up here. And I think you've heard it from everybody. You didn't even hear the other side of that, people. There's not enough parking. It's bad driving up there, you know, and like I said, we should have sat down with the courts and said, okay, what do you want to do? I wanted to do this 6-7 months ago, and it never evolved.
Well, Chris Lukasevich wanted to do it on January 6, 2020, and you voted against that assessment.
The assessment for the courthouse.
A holistic stop of all constructions for 90 days. Check the minutes, January 6, 2020, what I referred to as my day one motions. You voted against it. That's all I have.
Okay, where do I start?
I told you, happy birthday. Happy birthday.
Yeah, I noticed a difference when I walked in this morning and seen them, you know, and we do have a wheelchair available. We are really plagued by space needs and personnel. As you heard Chris say about the parking lot, we had these resignations. We are looking for people there. And when he talked about those parking attendants, I can see why they're quitting, because there's no respect. The abuse that these people get from the visitors in this town are unbelievable. We get it here in the office when they get a ticket for not paying attention to signs. We can only put so many signs out, put too many signs out there, and they aren't going to see the signs they're supposed to see. They can't read them all. It is really getting ridiculous with the abuse that our employees in a lot of the offices are putting up with. There's no respect at all whatsoever in a lot of these positions or offices where you visit. And our personnel, especially the parking in particular, I mean, other offices have the issues too, but those people are, if you don't believe me, you just go out there and walk around with Scott, who was with us today, one of our lone last people left.
Lone survivor almost.
But I think, you know, and maybe it's his height and
Right.
that intimidates
Right.
people when he doesn't.
Right.
And that's a good thing, I guess. And we do, in the fall foliage, we put a sheriff's deputy out there and have been for the last couple of years, just to let people know that someone is of authority in the parking lot, and it does help. And I think it's a wild cost to us.
Mhm.
So then we get into what I talked about again last week, and that is the prison staffing. Again, we have 3 people in the hospital. That's 3 corrections officers we got to take out of the prison and put in 2 separate hospitals at this particular time. I know I met with Deputy Ryan this morning. He was on the way over there with the Sergeant George, and they were going over to talk to Rick Parson in the adult probation to see if they could help them. We are bare minimum staffing in the prison. It's not only Carbon County, the other counties are suffering all those issues, I would say, throughout the whole Commonwealth. So that is an issue. Again, the children and youth. When we talk about space issue, Rocky knows full well, and Chris, I mean, I think most of us do, is the pressures that we're getting from the Northeast Regional Office in particular. We have been battling these people for the last 5 or 6 years, I think. And the previous administration, I'm talking about Commissioner O'Gorick and Commissioner Gerhart, we went through it with them. Those issues continue, and they do nothing but seem to continue to hammer us all the time our administrator spends more time trying to answer or come up with plans for everything we're written up, corrective actions, we implement it and we get turned on and around and get slapped again. And so we continue to work with that. If we don't keep up, again, we talked, what, 6 people we had to hire, and a lot of times we don't have a choice in hiring. And I want the public to think about that. We don't have a choice. It's a protection of the children. We are mandated, although they pay a good percentage of that reimbursement and everything. They don't pay for everything, of course. It comes back to our taxpayers as well, and you as a state taxpayer at 80%. Like I said, I think we're looking at 9 new positions next year, a whole new unit to keep up with the caseloads. That trickles down into domestic relations, the sheriff's departments, the court systems, and all the offices. So every time we do this, it affects human resources. Almost every office in this county is affected by those things that we have to, are mandated to do. We don't have a choice in those votes. So the other place, what I talked about, prison, children, youth staffing. Railroad Commission will be canceled next week. There's no need for a Railroad Commission meeting, so we're still waiting on some other things to be settled with the railroad. I don't think the deed has been recorded yet, so still hammering out minor details. Other thing I wanted to mention real quick, we talked about the fair a little bit and the farmers, and I did go to the auction, and I am proud to say I bought a rooster for my grandson.
Neighbors are happy.
He lives out in Franklin Township, and he already had 8 hens, got his first egg last week, my grandson, and I couldn't afford to buy it at the auction. I bought it right from the farmer, the girl that raised the rooster. And the prices this year were unbelievable. There were only 41 animals that were auctioned off. Usually they have well over 105, 110, 12 in that range. So this year, the grand champion steer went for $6,100. Usually it's about $3,000, $4,000. The reserve champion went for $10,000. Chickens, rabbits, I know one party that paid $1,000 for a chicken, and they gave them 2 more when they went to pick it up. So that was nice. That's a bargain. Buy one, get 2 free. But those prices were, $1,000 for that particular chicken, the pen of rabbits. All of them, I think, every one of them, maybe except one, that only went for $750. And, so the kids that did have animals made out pretty well. And the reason the low turnout last year, what happened with the kids with COVID, they couldn't sell the animals. And I think I went through this last week. And so the kids were afraid to buy the animals this year and take that loss. But those that did certainly did well. And hope that support continues. My grandson's happy with the rooster. I went back and picked it up on Sunday. It is loud. So, but and that came from a young kid, a young girl from Weatherly. They heard my grandson talking. When are they going to auction off his rooster? We didn't know at the time, and it wasn't auctioned off. But the family behind us heard us, and they said they would give it to him. But that did not happen, of course, because when I negotiated with the little girl, she had to figure out how much it cost to buy the chicken and how much it cost to feed. And I made an offer where she said $15. I said, wow, tough bargain here. I said, I'll give you $50. She said, okay. $60. You drive a hard bargain. So the kid got something out of it. And I'd be more than happy because I couldn't afford the $750, $800 for a couple of chickens that I didn't keep. So it was good, but it was a fun time. If you never gone to it, please plan on it next year. I think we covered everything. We covered enough for one day.
Wayne, you know what? I wanted to say one more thing on that railroad situation.
Oh.
I know it's been in the paper about the railroad up there at Lansford, And I think we were crucified for selling the Lansford Railroad.
Oh,
Well, to sell it, you have to own it, and the county did not own it, so I hope that.
In
gets
Lansford
clarified
area.
A little bit,
Oh,
like, in fact, I think there was a letter to the editor last week again on it. Like why did we sell the railroad? Well, we didn't own it.
we're not
So we
talking to
couldn't
them.
sell it.
Well, I
Yeah.
didn't know that.
Yeah, it seems like members of Lansford Borough Council were confused or totally uninformed about what we were actually selling and what was actually continues to be owned by Reading and Blue Mountain Northern Railroad
So the county sold the Nescahoning
line.
not the Lansford line.
Yeah.
We don't own.
We don't own it,
Lansford
right,
line.
yeah.
Yeah, I wanted to sell it.
Yeah.
One thing quick before I adjourn, did you, the chairman of the prison board is here. Tony, do you have anything to add to what I said about the personnel shortage, et cetera?
Well, we continue to have an ongoing problem with personnel at the prison that seems to spill over into the sheriff's office and into the courts. So we continue to try and assist until we have full staffing at the prison. But right now it's a challenge for all of us because we're all facing some challenges with personnel and vacancies, but we'll continue to help. I know that, part of the process going forward is to look at these particular cases that require hospitalizations and the viability of maintaining incarceration on those. There's some plans out there to look at that, but it's kind of a coordinated effort and we're doing the best we can to try and help out.
I apologize for not mentioning the sheriff's office, how you're affected as well. So, one thing, Scott, one more thing, parking lot guru.
Yeah.
If I could, I just want to thank the commissioners for acknowledging the situation that is going on over in the parking lot. I love sharing this story. I worked 28 years in corrections, adult and juvenile corrections. And in my 28-year career, I've just celebrated 1 year as a part-time parking attendant. And I've taken more crap. I've been threatened more times than I was in 28 years of working in corrections. I've taken more threats, more possible assaults than I've ever encountered in all those years of working corrections.
Well, thanks for helping us on our recruitment, Scott.
Tony,
And I just want an additional comment just to piggyback on what Scott has said here. The commissioners are right that we do have some assistance from sheriff's deputies during busy times, but that doesn't mean we don't get the same kind of abuse from parking lot. Even though we're in full uniform, so we still deal with it as well.
thanks for those comments, Scott. I
Yeah,
think we
Scott,
all really appreciate
I've
it.
already seen it where, like, you were trying to help somebody or one of the other attendants, and you tell them to go in one direction, and they almost like run you over. They don't even have regards for your life. That's a tough job.
It is. I never really expected it, but I'm prepared and I've been trained for it.
Sure.
Well, we pray for your safety. Okay, meeting adjourned. Any quick questions before you bail out, before I convene the retirement board? Anything? You're gonna stick around? Shouldn't last more than 3 hours.
I won't
Okay,
say
you're good.
questions.
I
You
have a quick question, just with the issues going on in the parking lot. I mean, is that something that we've been seeing more of since the whole kiosk system has been in? You think it's just people not wanting to understand and getting frustrated with that, or is it
It's-
before that?
It's been bad before that, and it might come, make it a little bit worse. But especially we do have issues once in a while where one machine isn't working or something, or there's a long line and I've seen Scott pointed out where, well, there are other machines here to, so.
Right, and we are working through some issues with Jim Thorpe Borough in regards to the app, the Flowbird app, distinguishing between Jim Thorpe Borough parking and county parking. We have a meeting coming up with United Public Safety and Mitch from Butts Ticketing, the Borough Jim Thorpe, to talk about how do we better ensure the one entity isn't unnecessarily ticketing someone who may have paid in the other parking jurisdictions area and stuff like that. So that has created some problems that we didn't have in the
But it
past.
was bad before. Yeah, it really was. Especially-
But even with the kiosks, I think now, that the kiosk is in, you don't see as much backed up
Right,
traffic,
yeah.
you know what I mean? It's clearing the main road out.
Yeah.
I mean, that's one of the big advantages. I mean, and with the kiosks, you're gonna have problems somewhere along the line until the kinks are worked out. Everybody just has to bear with us.
It's not a new situation. I can tell you from my years being involved up at the mansion.
Mhm.
What happens is, because of traffic patterns coming into town,
Mhm.
people get
There you
frustrated
go. Before they get here.
before they actually
Yeah.
get parked.
Yeah.
And they take their frustrations out on the first people they come in
Right.
contact with. A lot of times it's our parking attendants.
Yeah.
Or it could be people in the local restaurants, but it's not anything new. It's just aggravation with trying to get into town and get situated.
Yeah.
And they vent their frustration on the first person
Yeah.
they come in contact with. And it's been that way for years.
Okay, Alyssa, we're good?
Good.
Okay. Now, call the monthly meeting of the retirement board to order.
Thank you, Mr. Chairman. It's going to be hard to surpass the good news from the livestock auction, but but we have all good news to report from the retirement board. First, I'd like to seek a motion to approve the minutes of the previous meeting held July 15th of 2021.
Second,
Mr. Sheehan,
Yes.
Mr. Svercek, yes, Mr. Arner.
Yeah.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
Any guests concerning retirement board business?
Behind us.
Thank you. Report of executive sessions, there weren't any held. Next will be a motion to approve, ratify the warrant checks number 4070740 to 40713 and direct deposit number 7013117 to 7013510 for the month of July.
motion right.
Second.
Nope, wrong.
Okay, Mr. Sheehan,
Yes.
Mr. Svercek, yes, Mr. Arner.
Yes.
Mr. Lukasevich.
Yes.
Mr. Notstein.
Yes.
Thank you. Next is the retirement activity report for the month of July. We had 3 retirement refunds and 2 superannuation retirements. With our portfolio value as of July 31st, 2021, $94,377,715, which is another all-time high. I'm happy to report from the month before. And then I always like to check the most recent balance as of last Friday, August 13th. The portfolio fund valuation was at $95,338,886. Any questions on that? Next, we'll move to correspondence. I did not receive any. Solicitors report. Okay, thank you. And next, we have our investment manager, Sarah Wilson from Marquette Associates, joining us via Zoom. Sarah, can you hear us okay?
I can. Good morning. Can you hear me?
Yes.
Loud and clear.
Great. All right, so I think you have your books in front of you. And we're going to go through the second quarter. We'll do a little bit of a performance update as well through the end of July. So if you go to just Exhibit 1, Tab 1, just a quick update on Marquette. Currently, we're at 297 billion assets under advisement, and we're actually celebrating our 35th year in business. And when you can see that we've added a lot of employees. So over the course of the last 12, 18 months, even through COVID, we've been adding employees, and we've got a lot of new faces in the Westchester office. We've added 2 performance analysts and 2 client analysts. So we continue to grow. And then just you can see below there is the 2021 investment symposium, and that is save the date November 12th. We always do that, and more than likely we'll be also live streaming that, and it will be available on our YouTube channel. So let's turn to the next section. And, some of the themes in the second quarter, we've seen global growth continues. It's not uniform across the world. Most developed country economies are projected to be pre-pandemic levels by mid 2022. So we'll talk a little bit about that and how that affected some of the performance. You know, we've been looking about inflation. We know that equities continue to rise, but the cyclical rally cooled in June. Volatility has been muted and earnings growth expected to be strong, and rates again fell in the second quarter. So when we go look at that first graph there, and you're going to look at US real GDP, and you can see where it dipped. And that was, of course, when we had the pandemic and COVID, the second quarter 2020. And then look how it spiked year over year. And then you can see that, you know, we went in there, you can see that huge jump, and that's when the economy started to open. And now we're looking at GDP, but we're starting to see that it's going to start getting go a little bit down towards the end of second quarter 2022. We also know that if fiscal policy does become a drag on economic growth, it'll be imperative for the recovery in the private sector to continue. And we've seen it this week in the market that, you know, the Fed has come out. There's been some hint that they're not going to be doing any more bond buyouts, slowly going to, you know, kind of ease that out. And the market doesn't really like that. Interesting, when we look at savings, you know, we always talk about personal savings. Consumers are sitting on more than $2 trillion in excess savings relative to the pre-pandemic trend. A lot of that is because they couldn't go out and they couldn't spend. Some people, you know, we're starting to see them put that back into the economy now. And, you know, you can see that with the inflation starting to rise. And then you can see below there, look at the fiscal contribution to GDP growth. So when we look at that, we look at how 2008, we know that crisis, and then we saw how the contributions worked. And then go look at the fourth quarter of 2020, you can see that that really helped contribution to GDP growth. And then we look at it starting to slow down. If you go look at the next page, page 7, we look at inflation, and you can see the difference between flexible CPI and sticky CPI. And you can say, well, what is that? Flexible CPI is the consumer price index is things that move fast, that they will change in price. And then you look at sticky CPI, and that's something that takes a lot longer to change in price. And so we look at where that is on inflation and how that sticky CPI spiked in December of 1979. And then look, it's been straight across, but we see the flexible CPI has been going up and down. And then when we talk about short-term interest rates below, this is a little bit interesting, is if you look at the actual where they are, then look at where the Fed, that's red, the Fed June 2021 is saying, look, we're going to probably raise those rates a little bit. But then look at the future markets. The markets are saying, we think that we're going to actually see some more raising of rates sooner than what the Fed has been saying that they're going to do. If you turn the page, we'll talk a little bit about what's been happening in the global economy. And I thought this graph was very interesting. So we look at the time until projected GDP per capita reached pre-pandemic levels. So look at China. China has really gone, then the United States, and then we look at Argentina. It's saying that Argentina, for its GDP to get back, it's going to be the end of 2025. So, you know, when we look at investing, you can really kind of see that when we look at some of the international managers, how they've been doing, and you can see United Kingdom and France. And a lot of that is because they've had a hard time with the COVID. We know that the Delta variant's out there as well, and that it's harder for some of these countries to get back on track. And then China, for instance, recently cut the reserve requirement for all its banks by 50%, 0.50%. The move has the potential to release around 1 trillion yen, which is about 155 billion in long-term liquidity to support the post-COVID recovery. And we also know that China has done, has done very well, because even with the COVID, we get so many goods from China. And especially, we've seen the growth of Amazon and everybody's doing online shopping. And you've really started to see that China has been able to keep up with that. When we look at page 9, we talk about the global equities rallied in the second quarter, continuing their strong start. And then you can see US equities did 8.2 for the quarter. And then for 1 year, they were 44.2%. International did 5.5. We look at what's happening with US bonds, and we'll talk about that and the diversification that you've made. Because they're actually, for the second quarter, they are in negative territory. But then we look at the high yield bonds, and they did 2.7, but high yield bonds did 15.4. And last year we started to buy into high yield bonds. We saw that the spreads were very good. And so we said, look, we're going to do this. It's not a long-term investment, a year and a half. And we slowly scaled that back, but you've actually gotten some nice return from your high yield bonds. And then we look at commodities, and the one thing that we've seen in the last week is that oil, Brent crude oil, is at 65.67 a barrel. It's actually down 18% since July 6th. So we've started to see that, and commodities have had a strong quarter, but they're going to possibly, with oil going down, we're going to start seeing that change. And then we look at US REITs, the real estate market that we've seen throughout the country, we've seen a lot in individual homes going up. But what's going to happen is that, real estate, we've put that in the portfolio. That's, institutional investment. So that's, they're doing corporate real estate. One of the things that's happened with the pandemic is that, a lot of people are saying, look, we can have some of the staff work from home. So these big cities are going to really start seeing some issues with the real estate, and the rents there. If we turn the page, we can look at the US equity markets. We're on page 10, and we look that all sectors finished the quarter in black except utilities, with more cyclical areas generally outperforming their more defensive counterparts. And you can see what they've done for 1 year. Consumer discretionary 53.1%. Look at energy at 56.4%. And then financials have had a very good year at 61.7%. And we look at the S&P 500 returns by PE, and we look at the below and that, and you can see that year to date, we talked about what moved the S&P last year, and it was five companies: Apple, Microsoft, Amazon, Facebook, and Alphabet, which is actually Google. And those 5 were the best things to hold after the recovery because they moved the most, they moved the market, and they were the worst right before when the market went down. And so, the rest of the S&P has actually struggled, meaning that you've got 495 companies that have been basically almost flat. And you've got these 5 companies that have really moved the market last year. You can look at the US fixed income and look at the yield curve and how it has started to change. So we're looking at June 2020. Then we look at the maturity and the yield curve for March 2021. So we've seen it go up a little bit. Interest rates fell for immediate and long-term treasuries in the second quarter. Most market participants attribute the drop to technical factors. More specifically, net treasury issuance declined noticeably in the second quarter, leaving Federal Reserve purchases of treasury debt higher than the entire net insurance during the quarter. And then we look below and we look at the high yield spread. So look at January 08, when we go back there, they went up. They were definitely worth purchasing. And then you go look in January 2020, And we can start seeing in that March. So we got some nice spreads on that. We purchased the high yield. And as it went down, we actually trimmed that position. Are there any questions on the economy right now? All right, let's go to Exhibit 3 and we'll look at how your portfolio's done. So you ended the quarter June 30th at 93.8 million. For the second quarter, the plan returned 5.6%, had a net investment gain of 5 million. And then the fund returned 9.4 year to date through June 30th and actually outperformed the benchmark at 9%. And you had a gain of 8.2 for the trailing 12 months. And I think this is interesting because this is when when we had taken over the OCIO, we had made all those changes in there, and you actually have had a net return of 27% with a gain of 20.6 million. And you were right on your benchmark, 27% versus 26.9. So that's exactly what we want to do. We want to kind of take out all the swings of the up and downs when we look at performance with the benchmark. And then since inception, since we've been working with Carbon County, so that was 2015, we became your full-time consultant. You have returned 9.1% per year with a net investment gain of 42.9 million. And so that's a really nice return when we look at that, because that is outperforming your actuarial assumption. And that is, really important. So it means that the plan is actually healthy, you're well-funded. We look at the US equity composite return 7.4% during the quarter with a year-to-date return of 14.3 through June 30th. US equities did 7.3% for the quarter. Global equity composite returned 8.5 during the quarter and year-to-date 13%. They outperformed the asset class benchmark over both time periods, and we'll look at that return. Non-US equity returned 5.5. So you can see that international was down a little bit. US equities returned 7.3 for the quarter. Non-US equities returned 5.5, and year-to-date had a return of 11.4. We witnessed a style and market cap shift during the second quarter. Growth stocks outperformed value-oriented stocks, and large cap stocks outperformed small cap stocks. Last quarter, value outperformed growth. We have seen that over the years that growth has been outperforming. And a large part of that is because the market is priced so high right now that when you go in and you look at investing institutional, they're really going to want to see where they can get the growth, where they can get the return from. Fixed income composite returned 1.9% during the quarter, was negative year-to-date with a return of a negative 1.5. Lord Abbett High Yield continued their strong performance, returning 3% during the quarter and 19.3% for the trailing 12 months ending June 30th. So that was really well-positioned, putting into the high yield. We only did a little percent, but it really is how the fixed income. And then we're going to look at, because we've been doing the custody transitions done, excuse me, we're going to start making some manager changes, and that is to realign the portfolio the way we want to, and that we can actually purchase some of the different kind of indexes and stuff that we can build around and actually lower the cost of the overall portfolio costs. And then let's turn to page.
Okay, Sarah, before we turn off of page 16 and 17, just a couple of things I want to note to the other members. Under observations, retirement fund returned 9.4 year to date through June 30th. And for the trailing 12 months, the retirement fund returned 27%. Keep that in mind, because when the actuary comes with his annual report, he's going to be recommending that you cut the estimated annual rate of return down from 7.5. So I'm pointing this out to you that you're already beating that. And when you look at the trend over 5 and 10 years, because it's a smoothing, you're gonna find that we're usually well over the 7.5, just to point that out. And then on page 17, if you look at the net cash flows, on the summary of cash flows, net cash flow for 1 year, 3 year, 5 year, you can see that the trend is roughly $4 million a year outflow coming out of the fund. So you need to keep an eye on that. And then the return summary, you can see the policy index and our fund composite were right in line where we should be. So that's the only things I wanted to point out on those pages, Sarah.
And I think that, once the actuary does come out, we definitely, I'd like to be there. And I know he's going to start. And, you're in a very good position now, but looking forward, it is something that we should probably talk about is that 7.5 and being able to lower that. I mean, you've got these great returns. Who would have thought the market is going to go? But eventually this market is going to correct. And we started to see a little bit. It's harder to get those returns when you've got US fixed income at 24% of the portfolio, and you can't go really anything lower than, your fixed income, where you are, you're 65-35, and, to go all in the market, it's great when it's up, but not when it's down. So you've got an asset class there that is over the next couple of years is going to have a hard time getting a 3 to a 5% return. So that, and then if you have the markets kind of go negative. So it is something to think about. You've done a great job. You're in a great position, but, looking forward, those, you've really picked up on how much you're taking out of the fund. And so it would be worth having that 7.5% discussion about lowering that at some point in the next couple of years. And then if we can turn to page 32, I just want to go over some of the managers. So if we look at page 32, so you can look at your equity composite, we look at the returns. One of the things that we've done is you've actually had the American funds, Washington Mutual did very well, 6.4 versus 5%. And then GWK small mid-cap core has actually done well for you. And you might say, well, look at it versus the benchmark, where actually, they've struggled a little bit versus the benchmark, but they did 51% in the trailing 12 months. They have just been a little bit out of favor, but we're very comfortable with them. And you can see they're right back on where they need to be in the quarter. And then we look at MFS, low volatility. It's 7% versus the benchmark of 5.3. And then you can see it also did 9.8% for the year. We look at Harding and Lover, and they did 11.9% for the year. And then Dodge and Cox is the one that, it'll go up and down. And we know that that's where you get your alpha from. And there you've got, they'll go have a little bit more volatility. But they have done 8.4% versus the benchmark of 4.8, and then look year to date, 21 versus 14, and 1 year 54 versus 38. We are comfortable with those swings, just because that is one active manager we've put in there that we know they're going to swing around, but they actually have done some great performance. And we put those in last May when we made those changes. So since we put them in, they've done 55% for the trailing almost 12 months for you. We look at the non-US equity composite on page 33, and we did Fidelity Total International. So we did that as an index. Schroders is your active manager, and you can see we put them in last year in June, and they've done 5.7 versus benchmark of 4.5. And then we look at year to date, they've done 14.6%. When we look at the real estate composite, we look at Morgan Prime Property. And so year to date, they've done 4.7%. And then you look below and look where fixed income is. It's a negative 1.5. So we did fund some of the real estate with your fixed income deposit. CS McKee has done well. They're right on their benchmark. And actually for the trailing 12 months, CS McKee has outperformed and they were positive when the benchmark was negative. And then you look at Lord Abbott High Yield, that has been, we put them in May of 2020. They have done well for you. They've done 5% year to date. And sort of the trailing 1 year, they've done 19.3%. So we continue to like that. But you can see it's only 0.5% now of the portfolio, whereas last year they were up to about 3%. We've slowly done that. We will possibly, depending on what happens with the fixed income markets in the next 6 to 12 months, what's going to happen with the Fed interest rates. We're going to look at the bond market. We're also going to look that we now know we've got the Delta variant, how that's going to affect the economy. We may go back in and see that those spreads are, attractive, and we may go put that back more into there. And I just want to say for July, you are up 1%. For July, you've ended that market value at 94.3 million, and year to date you're up 10.5% versus your policy index of 9.9%. So you're in pretty good shape. I would love it if the market just stayed flat right now for the rest of the year and did nothing. I mean, it would be great to see a 10% return this year. Are there any questions?
I think so.
Sorry, are you going to be going on to exhibit 4 with the investment manager information? Or no?
Do you want to talk about some of that?
Well, but one of the questions I had, and I know it's hard to avoid this, but it's a question related to diversification. And of course, we all understand Marquette cannot control the companies the funds invest in. But when you look at the top 10 holdings, I think you see some overlap of what I'll call those, top 5 market gorillas you were talking about earlier. And I didn't know if that's a concern at all from a diversification standpoint from your company when you look at some of those top 10 holdings of those various funds.
Well, what we actually do is when we look at that, is that we'll go to, and actually I'm going to take you back to page 22 and 23 in that quarter. And that let's look at the total equity composite, because that's really what we're almost talking about. When we look at that, we go look at all the risk return statistics and we make sure that they're in line and where we want to be. So sometimes you are going to see overlap in there, but we make sure that not only are you diversified, but we look at, we'll look at the maximum return, minimum return, and then we look at the annualized excess return over risks. And then we'll look at the beta, and then we'll look at the alpha. So it's where we kind of want to be, where we are, and then we look at the tracking error. And then we'll look at the quarterly excess, in a rising market and in the down market. So what we're trying to do is we're trying to keep you well diversified, but we understand that there will be overlap with some of those companies, and there's really nothing you can do, because you do, when we go and invest in those companies, when we put those in your portfolios, you could get a company that's going to go off and buy things that you don't know, but that makes it more riskier, that fund manager. So, with where things are in the market, you will see some overlap, but we make sure that when we look at that, we make sure that the portfolio is actually doing what it's supposed to do, more on the statistical side than each individual holding. But we do run that and look at that as well.
Yeah, we have gone through this before, haven't we, Ron? Where we
Yeah.
had a huge overlap at one time.
Yeah, we went through, and that was before we did the OCIO when Mr. Crampsey was here. We went through this, and part of the problem, and it's not a problem, it's just the reality is when you're invested in US equities, And you also have global equities. Global equities include US equities, so you're always gonna have a partial overlap. And like Sarah had mentioned before, there is a small pool of stocks that are really driving the markets. So in order for these different funds, even though they have different makeups or goals, it's imperative for them sometimes to buy the same stocks just to remain competitive in the market. So did I explain that properly, Sarah?
You did, but when we look at that, so if, I hate to bounce around this book, but when you look at Vanguard Total Stock Market Index on page 38, and you look at American funds, Washington Mutual, yes, they've got a lot of the same. But then you turn the page and you look at GWK small cap, mid cap, and they're completely different. So you will see some overlap with the index and your like large cap manager. And you're right. And then the global is going to have that. But that is the reason why we diversified and we put something like the small mid cap in there. And then we've put like MFS low volatility, which in their top 10 holdings is a little bit different than we'll see in the index. So you will have some overlap throughout because you are holding some index funds as well. And, the index is driven by the weighting, as we know, and then that manager is going to, if they're a large cap manager, they're going to have Facebook, they're going to have Google, they're going to be almost the same weightings in the top 10 holdings.
And what Commissioner Notstein was referencing was back when we had a lot more active managers and they were all buying the same stocks and we had tremendous overlap. And that would end up being a greater concern than being in indexes and having the overlap. But the controller's correct. We do see the overlap in the top 10 holdings of a lot of these different funds.
Right. And I think, Mark, when you look at that, it's hard not to have that overlap. But one of the things is that you have added a little bit more of index funds. You're still outperforming, and you're also the overall cost for the total portfolio right now is at 31 basis points. So we've lowered that as well.
Yeah, and I think overall, not speaking for the board, but certainly myself, I think the OCIO methodology is working well for the fund as far as management and return goes. And that's say the proof is in the pudding. If you look at our results, it's very nice.
Yeah.
And Sarah and I had a little sidebar conversation earlier about forecasting when we're going to hit 100 million. So I know once we hit 100 million, we're going to be really in great shape. But
reaction to the market.
Right.
Now.
Right. Yeah. No one could predict that, and that was just a finance discussion.
And I think you've seen a lot of growth, which has been great, ever since you switched with the OCIO. And one of the things that I think you'll be able to see really is a lot of times when we get a lot of volatility back in the market and we've had swings, that we're able to go in and make sure that you're within your asset allocation weekly. If the market moves 5%, we can decide to go back in 2% or 3%, and we just keep actively doing that. And that's going to make a big difference when you're in a down volatile market. You will really start seeing where that OCIO has, helps, that you're not sitting there for a month or 2 months waiting to make major changes.
Yes. Any other questions for Sarah?
Just one last item. How's our changeover of custodian going? Are we switched over yet?
We are switched over. Terrence has been handling that. Mark, I know you've had a couple of conference calls with US Bank, so I think we have managed to get everything online, and we're able to, we can continue to trade in. I think all the assets have moved over.
Right. As far as I know, it's pretty much done. There
Yes.
was I don't even want to say a delay, but when to move the assets, even though it's a digital move, it took a little time, but mechanically, as far as the changing of how we do things with US Bank from Bank of New York, I think that's all been set up, obviously, so.
And it took a while for us to convert when we left Merrill Lynch and went to Bank of New York, so it takes a couple of months till you smooth everything out
Right. So
and get everyone organized.
So the end of this month will be the first live transfer with US Bank versus Bank of New York.
So we'll see how that goes, finger
Right.
crossed.
Yeah, we'll start early just to be sure. All right, any other questions for Sarah? No? Thank you so much, Sarah, for joining us.
Well, thank you so much, and thank you. Sorry I didn't make it out there. You know, we kind of thought the weather might be bad, and I really appreciate the board's understanding on that. I look forward to coming out to Jim Thorpe soon, and I think you're in great shape in the retirement board, and it's always a pleasure to work with all of you. So, and if you need anything or have any questions, please feel free to reach out.
Thank you.
All right.
Thank you.
Thank
All right, next
you.
we'll move to anything for new business for the retirement board. Anything under old business? Hearing none. Anything under further business? We're set to
Hearing
adjourn.
none, meeting adjourned.
Thank you.
Okay, Amy.
Take care.
Take care. Thank you,
Sarah,
Sarah.
take care.
Stay safe,
Thank you. Thanks.
whatever.
Oh,
With regards to parking attendants, how many parking attendants are currently there? I know you said Scott was one of the last few, but.
Yeah, I'm not sure. We're down to the last two now.
No.
Well.
Wait.
Yeah.
Yeah.
Three additional that we bring in during the fall.
Oh,
Yeah, right.
the other part.
Well, we have 3 actively working, plus the additional 3.
Yeah.
Yeah, so a total of 6.
And with regards to the Lansford line, Camp Valley line, have you guys met with Lansford in regards to getting all that cleared up?
Yes, we did.
And how did that go?
Pretty good.
I think it's pretty much cleared up.
Yeah, and the biggest question again, went back and then thinking that we owned the Lansford line and sold it without their knowledge, which we did not do. And I think just everybody, I don't
All
think
of them
any
were
of
not
them
aware of
realized.
that.
But yeah,
Oh,
no,
yeah,
They thought it was like we owned it and we sold it on under them, and we did not do that. I mean, it was just misinformation there.
Once that was clarified.
And what year was that? 19 what? That the railroad bought it.
1981.
You're the old
when
man, you
railroad
should
bought
Well,
it.
that's not, is that what it was?
1981, they bought the Nesquehoning Valley branch line.
Right.
Okay.
Mr. Forgay renamed it the Panther Valley line.
Mhm.
So that goes from Nesquehoning, or actually from here through Nesquehoning out to Hawks Junction.
Right, that's
So the
what we
land-
sold.
And that's what, yes,
Right.
that was, now where is this Lansford
It's
line?
running down from Tamaqua into Coaldale
Okay,
into
So
Lansford.
it's where they have all the storage right now?
Yeah, exactly.
Okay.
Yeah, you have the storage train sitting there, the tanker sitting there, so it's south of there. right?
Okay. Okay, I just wanted to clarify,
Yeah.
make sure I knew where.
And most of that is non-usable line, right? I think where Andy stops with, basically Coaldale, Lansford line is almost the end of the usable rail there, if I recall.
Thank you. And Mark, actually, the beginning balance for 2021, since I know this is an all-time high, what was the beginning balance, you know?
88 something with it, we report.
I don't know.
Okay, yeah, you can email that. to me.
For January.
I thought that one chart in the book had it. I don't remember under which exhibit. Well, the,
6 or 7.
year to date
Was
was,
it the page that I was?
year to date, is that what we should be looking at, the 88, 723 beginning,
There you are.
yeah,
Yeah, that would be it.
88,
Yeah.
723, 318.
93 cents.
Thank you very
Patience
much.
to get to the sense.
That's all I have to say. Yeah.
Okay. Right. Good. Okay, Kelly.
I just stayed 'cause I like you.
Okay.
3 kids.
Wow.